Hello, everyone, and welcome to Wholesale Change, the webcast and podcast from Distribution Strategy Group, where we provide thought leadership for wholesale change agents like you. Because if you're on this show, you probably are a wholesale change agent. My name is Ian Heller. I'll be your co-host today, along with my business partner and good friend, the smartest man in the room, whatever room he's in, and the doctor of distribution, Jonathan Bein, PhD. Jonathan, how are you today?
I'm not even the smartest person in the thimble, not to mention every room, especially if you're in the room, Ian.
Not true, not true. Hey, I'm glad you're here today. We have a great show for you, so we'll get into that in a minute. So first, what we want to do is thank Epicor for their sponsorship of Wholesale Change. For nearly 50 years, Epicor has helped distributors stay ahead with flexible, powerful solutions designed to increase sales, streamline operations, and improve customer experience. Epicor's industry-leading ERP solutions are built specifically to meet the unique needs of wholesalers, with everything needed to grow your sales, profits, and productivity while distancing yourself from the competition. Epicor is focused on the things that matter to you: work queues, PO variance queues, kitting, assembly, and production orders, advanced inventory forecasting, VMI, and special project pricing. They build their software using industry best practices and 50 years of distribution experience. But Epicor solutions are far more than just tools for pick, pack, and ship. Fully cloud-based with a modern UI, Epicor offers complete, robust e-commerce solutions, powerful BI and analytics tools, modern API and EDI, value-added services, WMS, virtual assistants, and much more. You can learn more about how Epicor helps thousands of wholesalers succeed by visiting epicor.com. Now we want to bring in our guest. So please welcome Ed Gerber. Ed is currently the president and CEO of the Industrial Supply Association, and he's also on the board of Summit Electric Supply with me, which is how we originally met. And so he's a good friend of ours, and thanks for being a friend of the show, Ed. Welcome today. We're looking forward to the discussion.
Thanks, guys. Appreciate you being here. And Ian and the doctor, I just realized that's what you call yourselves. So it's great co-hosts.
It sounds like a bad sitcom, actually.
It does. It does.
So do you want to walk us through your background here, Ed? I've got it up on the screen, but you've been in this industrial channel for a long time, really at every level, right?
I have, yes. So, just to give you a quick summary, about 35 years. And I started right out of college working for a small independent distributor out here in York, Pennsylvania, cutting tool distributor. It was a family business. Grew the business and went from salesperson to sales manager to president. And back in the late 90s, there was roll-ups that were taking place. And there was a company by the name of IDG that went public to go on the acquisition trail. They bought the company. And we were a large Sandvik distributor at the time. The Sandvik organization recruited me to go work for them. They were looking for a distributor executive because they were buying different brands. And then on the manufacturing side, working for Sandvik, I bundled some brands together, the first multi-brand strategy for the North American market. I then connected the dots through that with an upcoming indexible carbide company in the US called Walter. So today that's branded as Walter. And then IDG then recruited me back when they were moving from public to private equity. And they were looking for somebody to pull all the distribution companies together. I think at the time there were between 27 and 30 companies. So you can well imagine 30 different brand strategies, 30 different ERP systems, and you continue on. So my job was to pull it all together, create one strategy, one company. Then we ultimately sold that to Sonepar in late 2014. And IDG and Sonepar owned Hagemeyer, and then brought those two companies together and has since been rebranded as Valen. And then while that was going on, I was also serving on the board of ISA. I was the chair at the time, or several years before. And there was an opening, and then ISA board directors recruited me into this role. And I've been here now for about going on 4.5, 5 years. So it's been quite the journey.
Fantastic. Good. Yeah. I mean, that's a lot of time in this industry. So I think that, it really makes you well qualified to address our opening question, which is there disruption happening in the distribution industry? And if so, how's it affecting the industrial channel?
Yeah, great. It's a perfect storm. I think there's so much disruption that's taking place, and that's a big, meaty topic. But, what I always do is to make it easy for me is I always think about where it's starting from, right? And so thinking about it from the end customer point of view, if you just start there, right? So from an end customer point of view, tons of disruption taking place. It's been going on prior to COVID, but COVID has just accelerated tenfold, right? So from an end customer's point of view, they're becoming extremely sophisticated on looking at the value of aggregating spend. In other words, buying more from less suppliers. And I think suppliers think about the distribution base, because distributors are best equipped to provide the market basket, right? So as end users are starting to look at that, they've been looking at it for a decade, right? But typically the larger customers, now it's all the way down to medium and small. And when you're thinking about the easy button for aggregating spend, you have the traditional distribution models, integrated supply, but now you have B2C coming into B2B. Amazon does the same thing, right? So you have that whole disruption taking place from the end user that drives value for them. But then when you look at, from a distributor's point of view, they're looking at how do they participate in this opportunity. So they're taking a look at their product portfolio. Are they going to be, soup to nuts on their product portfolio? Are they going to be specialists? How are they going to participate in this? And they're moving more towards service-centric than product-centric, right? So that in itself is disruption. And then you have the manufacturers who are looking at that going, how are they going to participate in this, as well as their distributor partners become more service-centric, which they need to be, right, in order to survive and differentiate themselves. How's the manufacturer going to get their brand specified at the end user level? So they're looking at that, and then it continues down the path, right? Then independent manufacturers, reps, how do they play into this? So all of that's taking place. Then you pile on the work from home, right, that everybody is dealing with today, and how to have productivity and team morale, and how does a salesperson connect with an end user in a meaningful way, the new skill sets that are needed. Then you have the talent gap that we're all facing too. So how does this industry present itself as being an attractive industry for next generation?
Right.
So all of this is like a big melting pot of disruption that's taking place. That's a challenge for all companies.
So Ed, you mentioned the consolidation at the end user level in terms of their suppliers, in this case, distributors.
Mm-hmm.
What's driving that? Is it they want to reduce cost of procurement? Is it that they want to get better pricing? Is there something on the logistic level? What's driving the desire to consolidate the number of distributors they have?
Well, I think it's, there's lots of different things. I mean, we actually have a strategic framework that we've developed, Jonathan, with an ISA. It's called Channel 2.0,
Mm-hmm.
but it actually looks at that question in detail. What's creating this from an end user customer or an end customer point of view? We call it a compass, an end user compass.
Mm-hmm.
But essentially, what they're looking to, if they can reduce the supplier base, right? In other words, if they have 1,000 suppliers, let's go extreme for a moment. If they take 1,000 suppliers and they can go to one, just to paint the picture, they can streamline their supply chain. They can leverage costs. They can reduce the fragmented spend. It's just so much that goes on. Less FTEs that actually manage the process, free up resources. They can manage the inventory in a much better way. Today they have obsolescence. If they can outsource that to whoever their integrator or whoever the supplier of choice is going to be, lots of benefits there as well. And this continues on. So there's so much value added benefit for an end customer to buy more from less people, right? That drops through to their P&L, to their bottom line. And that's what's really driving that. And they're also looking to focus on the core competencies. So it's a mix of a bunch of different things. And it's no longer a pioneering effort, right? There's a lot of examples of success of that at the end user level, and end users connect with other end users. They see that as well, and they want to participate in that. So it's just accelerating.
I want to tell all the viewers that we welcome your questions. There's a Q&A button at the bottom of the screen. Please feel free to weigh in at any time, and we will use all the questions that we can possibly fit into this discussion. Now, Ed, when I think about disruptors like Amazon Business or Walmart.com, I see a lot of industrial products on there, right? My impression is it's a lot harder for them to break into the industrial market than it is for them to sell office supplies and janitorial products, because there's much more value added potential in the industrial channel. So but the Amazon business in particular is adding a bunch of services, right? I mean, not industrial as much as financial, right? Um, but they do seem to be the sharks circling around the edges of this industry and attacking some of the others more directly. What are suppliers and customers saying about those entities? Do they view them as credible competitors someday, or do they think they're just going to continue to nibble at the edges?
Um, it's a great question. I think it depends who you talk to, right? So
Yeah.
the end users that we talk to, we actually do end user virtual roundtables. We actually
Mm.
talk about this topic. And we asked them, and we actually just interviewed a very large end user, actually Train Corporation, if you're familiar with Train, very large multinational end user. And there's another one, Hitchner up in New England, kind of a mid-size end user, because we're really interested on that answer. Is it really based on size and scale?
Yeah.
You know, from an end customer point of view, yes or no. We try to understand that. And in both cases, what was really interesting that we found was the end user values true partnership relationships in their business, right? So that's very, very important. So they both valued their suppliers of choice in their respective businesses, and they're using their own ERP or purchasing platforms in order to aggregate and automate their purchasing function through their supplier base. So from their point of view, they really value their current existing relationships. Now,
Yeah.
we asked a question, you know, so how do you think about the future supply chain? When you look at the Amazons of the world, and the next one that's probably going to come around the block is there's more than just Amazon that's taking place, right?
Sure.
You know, their answer is, well, we value the true partnerships. We value what's happening on a daily basis. The people come in and they help us drive cost out of our production on the shop floor, which makes a huge difference. However, we will always keep our eyes on the horizon, right? To
Right.
see what else is going to be out there if there's a better and more efficient way. But so to your point, yes, you know, the Amazons of the world and there's other ones out there are being looked at. But in today's environment, large or small, the end customers value a distributor supplier relationship that can help them drive cost out of their production, which you need to have there on site in order to make happen. From the manufacturer's point of view, there are manufacturers that are selling through Amazon Business.
Yeah.
There are manufacturers, obviously, most of them sell through distribution. For what I'm hearing mostly from the manufacturers, the e-channel, the Amazon type channel is a very small percentage of their total business. And it's kind of more of a tuition type of thing. Just want to understand it and want to see it. And that's how I kind of view where we are today.
Yeah. So one of the things that's come out in a lot of our research, Ed, is that more and more suppliers are selling direct. And so sometimes we're setting up.
Or alternate channels, right?
Yeah, both, right. But so in any case, that old wall between, or that tight relationship between the traditional distributor and the manufacturer, it seems to be eroding somewhat. And manufacturers are more willing to risk some channel conflict to sell direct or through other channels. Do you see that? And if so, what's driving that?
I'm not seeing that at all.
Okay.
I understand the question, and,
sure.
and the assumption would be that makes a lot of sense. But as far as the data, and we survey on this question continually on it, and we ask the manufacturers of your total sales, what percentage of it goes through distribution, what percentage it goes direct. We look at, you know, how many distributors make up their active distributor profile. Active being a distributor buys something from them in the last 12 months.
Right.
And as we're seeing over the last 2 or 3 years, we haven't seen a decline at all.
Okay.
Now, what I can't, and by the way, the percentage of going through distributors is in the high mid 90s for the manufacturers in the industrial space.
Right.
Now, what I can tell you is that the prior conversation about disruption, you know, they're watching it through their lens,
Right.
seeing maybe a distributor partner that was very product centric before, shifting their model to more of a service centric, right? And the natural reaction, right, if they're not deeply engaged, understanding why, would be they're not selling my product anymore.
Right.
Then I have to go do something. Maybe we ought to do something going direct. So those conversations are, I'm not going to say the volume is going up, but I'm hearing it more.
Yeah.
And what I quickly remind the manufacturers when they start thinking about that is, it's not about you. And honestly, it's not about the distributor.
Yeah.
Being very, very honest here, it's about the end customer.
Right.
So if the end customer has already spoken that they want to aggregate spend more with less, and you are engaging in conversations about, well, maybe we need to sell direct, that is 100%, 180 degrees counter to what the end customer is looking for.
Right.
So the right answer is, how do they engage in more meaningful ways with the distributor, and how do they manage channel? That's really what the conversation is about.
So your data is really interesting. I'd love to get a closer look at it. We've done sort of broader, not specific to industrial surveys. We've actually run 2 that showed that a smaller percentage was going through traditional distribution. And the question was really asked about what's going to happen over a 5-year period. And in both sets of data that we had, we saw a 1,500 basis point drop of what's going through traditional distribution.
Yeah.
So we're going to be exploring more about that this year in our research that we're doing also with NAW. The advice we give to companies is, yeah, but mileage varies tremendously. So, you know, in your example, you start with 90% and you're saying you haven't seen a drop. It might be interesting to understand what it would look like in 5 years. Is it going to change? And what we saw was that a lot of it's going through marketplace, a lot of it's going through pure digital distributors, some of it's going through retail, and just a little bit more is going direct. Going direct per se was not the big move in either set of data that we had.
Yeah. So, I mean, just to bring clarity to what you just added there, Jonathan, I'm saying that the manufacturing community is still selling through distributors. However, where their volume through distributors is shifting. Okay. That's a different
question. Different question.
Of the same topic, right? So 95% plus, it's actually 98 was the last one I looked at. 98% of their business is continuing to go through distribution. By the way, and these are multi-billion manufacturers to $1 million manufacturers, right? So, and everything in between. So it wasn't like it was related to one particular size category, right? In general, 95 to 80% going through distribution. However, the manufacturing community is seeing that the growth of their total distribution portfolio is moving towards nationals, integrators, and and those that have E capabilities.
Great. So that's beautiful. So let's continue on that theme. So if we buy this 1,500 basis point shift, and whether it's 1,000 or 1,500 or 1,200 or 1,800, it's a big number, right? It's gonna vary. That probably means there's some kind of consolidation that's going to happen. And what you're saying is that that's consistent with what end customers are wanting in terms of aggregating.
Right. I mean, and that, again, that's a continuation of the same conversation, right? Yeah. So when you take a look at an end customer, and let's say today they have hundreds to thousands of suppliers. It's not unusual for an end customer to have thousands of suppliers in this MRO space that we engage in. It's very, very typical. And typically it's, you have, maybe 100 suppliers that make up the majority of the volume. They have this huge long tail, right? So the end users are looking for a way to cut off the tail. So just take that stuff and put it back in there. And as they do that, that's creating the distributors to say, okay, maybe we have a preferred brand in a category, but for us to be considered as a full supplier for that end customer that wants to buy that way, I have to now have all the brands within the category. I mean, that's a realistic challenge that distributors are being faced with. Then you think about, okay, it's not good enough just to have it on your website as rich content, because nobody cares about that, because you have to be able to ship it and deliver it and service it, right? So how does a distributor do that? And when you think about distributors in the MRO space, I mean, the average EBIT is hovering in the 2 to 3% range. So, there's not a lot of money in order to really expand how they want to do business. So now choices have to be made, right? So are they redeploying funds in different ways? Is it better to consolidate? Is it better to merge? So all these things now are at play. And it's a really interesting time. It's a great opportunity, quite honestly, if you're that distributor that has the strategic mindset and the funds in order to support that, right?
Yeah, that's been an idea I've had and counsel we've given to distributors. It's like you're either a consolidator or you are apt to be consolidated. And it's important to know which is which. If you're the consolidator, there's any number of companies that are going to be available in this decade because there's capital requirements necessary to scale into this decade that a lot of companies simply don't have.
That's right.
So those are going to be the consolidated. And so that if you're the consolidator, you're looking for companies that have good sales force, knowledgeable sales force, good customer base, and then you're going to roll that into your platform, right? Which has a lot of the elements that you outline in your 2.0, ISA 2.0 idea.
That's right. Yeah. And I think it's broader than that. Definitely those things for sure, Jonathan, but also it's about complementary product offerings. It's a huge strategic lever now when you think about the prior conversation we just had, right? And then it's also about geographic location. So a lot of these customers have multiple locations, right? And they're not always in the same local geographic area. So now all of a sudden, imagine if you are, a $50 million distributor, which by the way, in the MRO space, most distributors are $50 million and below in terms of quantity of distributors, right? So if you're a $50 million distributor and you're located in Boulder, Colorado, and you have a customer that's a big chunk of your business, and they're saying, listen, we want to aggregate spend, and we want to go with you because we love everything you've done for us. Oh, and by the way, part of the deal is you have to now supply these other things that you don't supply today. And we want you to provide the same level of service to our 1 or 2 or 3 or however many other locations that are located in other areas.
Right.
These are the logistic challenges at play. And you really can't play at it. You got to commit to it, right? So committing is the product offering, committing is the geographic location, committing is the logistics platform in order to make that happen. There's a lot there. And these are the challenges that any distributor that's listening here today, they wake up with these challenges or are faced with that on a daily basis. This is the life they live. But I do believe because of that, yeah, for sure. I mean, especially with the COVID and the revenue pressures and the gross margin, pressures that are taking place during this time, that's just going to accelerate the consolidation activity. I'm convinced of that.
So I have a question for you, Ed. So I would argue that there is no consolidator, or excuse me, there's no marketplace alternative in the industrial space, because if you look at what Amazon Business and these others do, I mean, Amazon Business is the only one that's really distributor-like in MRO, but it's all, when I was at Grainger, we called it on the carpet MRO, right? So it's facilities maintenance, it's not industrial. And if you want to be in the industrial space, you really have to do a lot of value add, including things like bin replenishment and potentially vending and technical support and maybe some kinds of repairs, configurations, programming, whatever. It's pretty complicated. I don't think there's anybody doing that. I mean, the closest thing is Grainger, right? So they do a little bit of that stuff. Part of their business is industrial, but there is no big behemoth company like Walmart or Amazon pursuing that in the industrial space at all.
Not that I'm seeing it. I mean, in the non-traditional, so let's call Amazon Business the non-traditional space for a moment. Okay. I'm not seeing it in that space. It's really, they're not order generators, they're order fulfillment, right? If you really think about what their role is. And they're really good at the logistics platform. They're really good at, if you don't know what you want, click it. You can buy 12 other things at once. But again, going back to the end user virtual roundtable that we had, it was so clear that the value add is what happens before the sale, and in the productivity and everything else that goes on.
Well, not just that, but they don't have the product, and their logistics are fantastic, but they only take the product to the threshold of the business, right? I mean, they don't deliver it into the bins or onto the production line. They stop at the door. So my question is, and we got to get to some listener questions in a minute, but my question is it even possible for there to be would you call it non-traditional distributor come in and scoop up the industrial business the way that their Amazon business is doing on the commercial side?
Well, I think with enough money, anything is possible,
Okay,
quite
fair
honestly,
enough. But,
and
but it has to have a return. So practically, is it responsible?
right, there has to be a return. But, there's a lot of discussions about what could it look like? What if it would do this? What if it would look like that? So I'm a firm believer that I would prefer to, I think the safer option when you're thinking about the business and operating a business is to think about what the competition could look like, and then build your strategy to make sure that you never get impacted by that, right? So, so what if an Amazon, or pick another name for that example, decided to go out and employ a bunch of people around the country in service contract in order to do bin fulfillment? With enough money, anybody could do that, right? So it's not that I don't believe that nobody can't do it. I just believe the barrier to entry is very high.
Yeah.
But that creates a real opportunity for, distributors in the MRO space. And I can speak for the MRO space because that's what I know. But in the MRO space, to really, really solidify their value prop and actually be growing their business through this time versus looking at it in defensive ways.
Yeah. I mean, I agree. Frankly, Amazon doesn't like to put labor in the fulfillment of the value because they have a scalable model that operates like a software company financially right now. So I don't really think they're going to go fulfill bins myself, but I do want to pivot to what's the role of the association because during this time, because that's really what the title of the session is today. And so here's a question that's relative to that from Jason. He's a longtime listener and he always provides questions. Thank you, Jason. So he's asking, given the impact that technology has on e-commerce and digital disruption for your members, what role can associations take in providing insights about how your members can understand the various tools and platforms that are available? Because there are a lot of options out there. So does the association have a role in providing advice or partnerships or resources to help your members figure out the right solutions to their digital and e-commerce needs?
Yeah, I mean, I can speak from, I want to speak from an ISA point of view because I don't want to in any way,
fair enough.
Assume what other associations are doing or not doing, right? So, so from an ISA point of view, we look at, yes, the answer to Jason's question is yes, yes, yes. And let me explain why and how we're doing it. So from an ISA point of view, we believe that we as ISA have a role to lead the channel forward. So, and that includes a lot of different things, right? So when you think about all the disruptions that we just talked about, most companies, when you're thinking about training their own associates, are very operationalized in how they think about training, right? But there's such a big piece of it about thought leadership. What could it be? What's coming around the corner? How to be thinking about moving your organization forward. So our vision from an association point of view is to help the channel by leading it forward. And we believe if we do that and we do that well, we ultimately strengthen each member company and we strengthen the industrial channel. So we start with that right up there, right?
Yeah.
So then the next thing we jump down to is, so what's our mission? What do we wake up every day? What's our focus as an ISA organization? And our focus is to make sure that we deliver content, education, strategy, and tools, all the things that Jason's referring to, right? That helps the member company navigate change. And there's a ton of change going on right now. So one layer lower, and I'm peeling the onion back because the question he asked is a really good one. It's a deep one, okay? Because a lot of people talk about it, but doing it is two different things, right? So peeling the onion back one step further, we spent a lot of time on defining what we called value drivers, but the value drivers specifically to a company, not ISA's value drivers. So when we think about the value drivers from an organization, right? You think about, talent recruitment, technology, lean, all those different things. So we've created 7 value drivers. And what we do is we're looking at all the different elements from those value drivers that we as an association need to be bringing together and aggregating and providing that thought leadership back out to distributors and manufacturers and reps who are our members. So, to give you a good example, when you're looking at digital and technologies, we're actually launched our ISA 21 actually this morning, right before this call, which is our virtual conference that we have in April. And when you take a look at that, you'll see a lot of the different elements in there that are related to digital, related to platforms, related to marketplaces, and really great roundtable discussions in order to help that. So yes, we're a firm believer of that. We believe that's why we exist.
Okay, and related to that, and I mentioned this yesterday in our prep call, when I told someone in the industry, they don't know you, but they know the industry, about us having you on the show, he said, "Oh, great. It's good to have someone come on and describe why associations are all going to die thanks to disruption." So it's not my impression that you guys are suffering versus your historical performance at ISA. So, but I have heard that before from people that, it's the end of associations, and it appears that demise is incorrectly predicted. Do you hear that at all? And what do you do to make sure that doesn't happen other than what you already said?
It's an interesting comment. I have heard that. I mean, I think it's an interesting comment. What I would say is, I think that comment is true for any business that doesn't evolve, right? Your manufacturer, distributor, association, a doctor's office, pick your business of choice. What I can tell you is this, and again, being transparent and sharing about the ISA journey. ISA has been around since 1902. So if my math is right, what's the math, guys? What is that? 119 years?
118 years, 119. Yeah, right.
119 years. And, for most of those years, similar to many associations, right? Their number one opportunity to deliver value is through an annual event. Right. So, and ISA was no different. So ISA was like that for many, many years. One of the reasons why I came on board was, right? So how do we change it from that to something that's much more value added throughout the entire year to actually help members, again, going back to our mission to navigate change. So we've really done a good job. It's not me, our team, our board, I'm just a representative of all that, done a really good job in repositioning the association to do that. So we're very fortunate that we started that curve prior to COVID, and we were well on our way. And, as terrible COVID has been for the world and for humanity, for us, it's really allowed us to accelerate leaning in to all the stuff that we built and scaling it up through a virtual means. So we're getting deeper and wider now in every company. Ian, we're also now getting a global reach where before we never had. So
yeah,
because we positioned it 3 years beforehand, and then COVID happened, and then now we're leaning into this here virtually, it allows us to scale our message. So we're in a much better shape today than where we were prior to COVID. So
just an endorsement from Joe, one of our audience. He says, we joined ISA last year. He said, through COVID and trying to navigate our future decisions, forecasting and dealing with our private equity ownership, ISA tools have really benefited our organization. The economic tools they provide are of great value. So
great. I'm not sure what Joe's last name is, but I love Joe. Joe's a great listener. So I appreciate that.
So we try not to read people's last names on the air, but I'm sure Joe won't mind us sharing with you offline. But yeah, that's quite a testament to the value you guys are providing. And then Jason has another question. And again, we encourage questions, so please feel free to contribute. I know for a fact that we have other association executives on here, so it'd be interesting to hear from them. So Jason wants to know, speaking of the long tail, are you seeing that distributor members are relying less on in-stock inventories and more on drop ship to make their inventory virtual? And if that's a trend, how do distributors continue to differentiate themselves, assuming that all competitors can drop ship?
Yeah, so I'll preface this in saying that I don't want to paint every distributor with the same brush, because I'm not seeing that across every distributor.
Right.
I am seeing that in certain distributors. What I find it is, and again, if you go back to the end customer and what they're driving the change, it makes perfect sense, right? So again, if you go back to a prior example, using you as that distributor in Boulder, Colorado, and let's say you're providing safety and cutting tools, just as an example. And then all of a sudden they go, hey, we want to supply welding supplies, completely out of your space. How do you do that? Well, you can go ahead and create supplier relationships, drop ship direct in order to get started quickly. You can go to wholesalers that, have the other product offering that rounds out your product offering. You could do that. So we're seeing some of that, but that makes sense. It's not a negative. It's actually part of the journey, for a distributor to get there. But on the other side, I also see distributors that are really stocking up their ABC type of high brands, making sure there's depth to the inventory, and maybe taking a look at drop ship for the other items. I see a mix of all of that. But to answer, was that Jason asked the question?
Yes.
Ian? Yeah. So to answer Jason's question head on, if a distributor is drop shipping more and more and more and more of their products and not stocking it, they would really have to think about what their value prop is for the end customers that they're serving, right? Because even integrated supply has the inventory on site at the customer. Vending has the inventory on site at the customer. If you're shipping products traditionally to your customers and then they get it in the time frame that they want, and drop shipping is okay, I guess that serves their customers as well. So I think it goes right back to just understanding the value proposition that distributor is providing their end customer. And drop shipping isn't always bad if the value prop is there. So
as a fill-in, not as a primary means of assortment, you're saying. So there are these aggregators or these marketplaces that are upstream rather than downstream, like Berkshire eSupply, right? Mm-hmm. So if you're a small industrial distributor, you can sign up with Berkshire eSupply to build a website for you that looks like your website, and you can add a bunch of their products, and it looks like you've got this incredible assortment. And we've talked to Berkshire eSupply a couple of times. We're not for them or against them. We've just talked to them. But when we talk to distributors, we don't feel like they're making a lot of headway in the marketplace. And not a criticism, just an observation. Do you have an opinion about them or about that general business model of sort of aggregating supply rather than aggregating demand?
Well, I think, the business model exists because there's a demand. It wouldn't be there if it wasn't a demand, right? So there's more than just them. It's RS Nasco, it's Go Now,
Sure.
You got eSupply. There's quite a few of them. So I do think there's a need for that. And again, going back, for distributors are looking to round out their product offering, the wholesale option is a really powerful option. It's another lever, right, to pull on. So I do think there's a place for that. In the Berkshire question, they actually have a pretty cool added value with that website. When you think about distributors, depending on the size of the distributor, right? The larger the distributor, they have their own resources in order to do whatever website they want and rich content. But as you start going down the size categories of distributors, that would be a value add for small distributors trying to figure out how to get into the game of an online world in a way to scale up quickly without a lot of cost and resources. So I think that's what Berkshire is trying to offer. I don't know what their traction is. I don't even feel for that one way or the other.
Right.
But they wouldn't be in business if there wasn't a demand for it, right? So, but again, I always go back. The way I just get clarity on everything is less about the manufacturer and distributor relationship. It's all going back to the end customer. Then it all becomes clear when you think of it that way. So,
do you see the generational turnover among customers driving the same move towards digital in the industrial channel that we see in other markets like commercial?
It's a topic that literally I probably spend 20% of my day every single day about. And yes, there's the whole social movement that's been going on, the whole D&I movement that's been going on. It's all connected, right? So when you take a look at, again, the end customers, I don't think anybody can deny that demographics are changing, right? And the end customers' demographics are going to change, and younger generations coming in. That's just the reality of the world. It is. And then that new generation is going to have much more sophistication. Not even sophistication is the wrong word. The digital technologies, it's just like, what are you talking about? That's all I know. That's where they're coming from, right? So you have that coming in the mix. And I see a real challenge for our space, the MRO space, distributors and manufacturers getting ready for that. And so what we're actually doing, talking about leading the channel, right? What we're actually doing is understanding the distributor's main problem. The number one main problem they always talk about comes up top all the time, more than strategy, more than digital, more than anything else, is bridging the talent gap. They struggle on being able to get the right talent into their organizations. So we've actually just created our first ever D&I, Diversity and Inclusion Advisory Task Force. Really sharp minds within the industry and outside the industry to come on in and try to figure out how can we help our members better position themselves to attract next generation, diverse incoming talent, because they're going to need that, right? So to answer your question, I do see it as a major opportunity and a challenge at the same time, for our members.
So I'm glad you brought up diversity. And I know you care about this because you mention it often at our board meetings for the shared board that we're on. Now, my personal view as a longtime manager is if you don't have a diverse workforce, you can't possibly have the best team, because unless you think there's something genetically inferior about people based on race and gender, then if you're recruiting objectively, then you're going to get a natural dispersion of population of all kinds of variety on your team.
That's right.
But it's a horrible problem in distribution, right? I mean, you don't have very many diverse teams. Are you doing anything at ISA? I mean, so this, you call it this D&I task force. Is that what you called it?
Yeah.
So what is the mission of that task force? I mean, that's a pretty bold step. I haven't heard about this before. Maybe others have in other associations.
Yeah.
But what are you guys doing? And who's on that task force?
Well, I'll tell you what. Can I share my screen?
Yeah.
Is it okay to share a screen?
Please.
Can I do that? Let me see here. I got 3 screens going up at once. So
Sharing is caring, Ed.
sharing is caring. So it's not a full-blown screen, but you'll get the picture here. So hold on a second.
Sure.
Can you see it? I'm not sure if the screen came up or not.
Yes, we can. Uh-huh.
Okay. So, what we wanted to do is, we always had a women's advocacy group and network called WISE. Okay. And that really was the start of it within ISA, was women's advocacy. And that's built up as one of our most successful groups that we have. 2 years ago, we started down the path of what's the next step. And so before it became, social unrest and social movement, our board and we've already been talking about it's all about bridging the talent gap. How do we bring more a diverse culture? Because women is only 50% of the gender, right? So now it's about how do you bring in everybody into the mix? So we started down this D&I initiative. And our initiative is, how do we help our members bridge the talent gap? Number one, we believe that a D&I mindset is absolutely important in order for that to make that happen. It can't be an initiative. It's an initiative, it's going to go away. Can't be a strategy, it's going to go away. It has to be a culture. So how do we change the culture and the perspective of this industry, the industrial industry, specifically in the eyes of recruits and next generation, considering that they are very D&I oriented already, right? So that was like the big thing. So we said, well, you know what? We're not pros at this. Let's bring in an advisory task force of people that really understand this. And you can see the mix of people that we have here. Some are leading the D&I initiatives for their company. So you can see the top left, Kimberly, is that for Stanley Black & Decker, right? Some are, in executive management for their company. You can see them on the list. And then we also brought in Idalia Hill. You'll see her on the bottom right, and she leads up the D&I initiative for PricewaterhouseCoopers. Okay, and she's actually leading the CEO pledge. She has the Fortune 500 companies connecting the dots, pledging to adopt a cultural mindset around D&I. So we are early in this stage. We've had about 3 or 4 meetings. This group is actually going to speak at ISA 21. It's a big part of our agenda is the human capital piece.
Yeah.
And anybody who's interested on that, just go to isapartners.org. You can find out all about it. The agenda is all there. But in short, we're going to have bridging the talent gap, the ROI of D&I. Very, very important. And then we're going to take it down a next step. We have Norton St. Gobain's going to talk about how they've transformed their recruiting and training practices with that mindset. We're going to take it down another level lower. We're bringing in Fulton Tool, a distributor out of Saginaw, Michigan, and how now they're taking that message to the high schools, the colleges and universities to create awareness from grassroots to bring it all in. And then we have Texas A&M coming in, closing out that human capital piece, talking about how companies now need to have an employee value proposition. It's not just a customer value prop anymore, but it's an employee value proposition, again, centered around D&I and why that's so important now, and purpose and culture. So there's a lot. This is a big, big, meaty topic. And we are leaning into this not because of the check the box social movement, right, which unfortunately a lot of companies are doing, but we see this as being the holy grail to crack the code on how to bridge the talent gap and make this industry more appealing.
So Ed, really great stuff. Question, when you mention ROI on this, I start thinking numbers. That's just where I go. Are you actually meaning measuring ROI? Or is there some other notion of the R on the?
I'm going to leave this task force to define that for us. Okay. This task force, I would be totally misleading you as being the right person to answer that question. These are the right people to answer that question. That's why we put the task force in place. But the reason why we use the ROI of D&I, the reason why we say that in the title is, we're trying to create a mindset. And by the way, we're a reflection of our members. Think about that, right? So, if D&I doesn't exist in the culture of our members, it's hard for the industry to have the D&I mindset. So it has to start within our members. So what we're trying to do is create a mindset that having the D&I can be not only the right thing to do as a person, but it's really good for business.
Yeah.
And if you can bring a diverse group of people into your company, and by the way, diversity isn't just black and white or man and women or religion. It is backgrounds, it's different ways of thinking, right? So when you're challenging it, when you have a topic, i.e. how are we going to have a portfolio to service our new customers? Or if we don't do that, we may not exist 5 years from now. I think you want people around the table that look at that problem differently. And then the outcome of that is probably a better outcome than if you had everybody in an echo chamber that thinks the same way, right? So we look at D&I as the ROI piece, Jonathan, to your point, is that we believe it's absolutely critical, but it's good for business. And then as far as what metrics might be measured, that's what this group is going to help us define. And we put together an all-star panel. So,
by the way, I firmly believe that the ROI is there. I'm really curious to see where they're coming out on the measurement, if at all possible, right?
That's right.
Yeah. Yeah. Like I said earlier, if you believe that there's a variation in IQ or capability based on gender or race or whatever, then you're a horrible person. Right. You need to look in the mirror. Yeah. So we're going to wrap up here pretty soon. Jason has another question. How do you think about how distributor members can feature services in the digital era? So do you have distributors who have found success with online services, Ed? Are they enhancing their traditional physical services with more online services? And is that a differentiator?
I'm putting my Gerber hat on now when I answer this question. I'll tell you when's my ISA's hat on and when my Gerber's hat is on. Because there's a couple different ways I think about that. Because having been a distributor that invested a lot of money on online, I have a perspective on that. So if I understand Jason's question correctly, is it specific to online? So are distributors finding that the online store, for lack of a better term, is getting traction? Is that the question that I think he's asking?
No, I think he means, there are digital services like, anything from account self-maintenance to processing your own returns to getting more technical guidance and information. So there's services that are delivered digitally rather not really buying online as much as getting services online.
Gotcha. Okay. So yeah, so I would like to tackle both because I think those are
Yep.
interesting ones. So my experience, ISA hat on and my Gerber hat on, in talking with distributors, everybody is looking and wanting an online store presence of some type. Everybody believes you have to have an on-site store presence of some type. You can argue whether that's good or not. It doesn't really matter. At the end of the day, most are not seeing the traction on their online stores when it comes from a browsing customer.
Right. Agreed.
So very, very low sales, if anything, going through that in that way. However, what the online presence does, it allows them to build out rich content that connects with punch outs to their existing customers. So what that presence is doing is allow them to become more operationally efficient, I would say, through that process. So I see more traction on that side than on the, a B2C type of approach online.
I think there's a refinement to the question that Jason's offered. So it's,
Okay.
there's the purchasing and the procurement of services through an online channel versus the delivery of services. And I think Jason was really talking about the purchasing and procurement of services via online.
So like buying maintenance or scheduling bin replenishment or installation, that kind of thing.
Yeah, I mean, that's where I believe the distributors, what I'm seeing distributors are investing in more is the digital operational efficiency to allow that friction to go away between mostly their current customers that they do business with,
right,
through their digital platforms, whether it's JIT replenishment, order acknowledgements, historical orders, all those different things that they would typically do manually. They're trying to move towards digital. I'm not sure if I'm answering the question spot on or not, but that's what I'm interpreting from the question.
It was great.
Yeah, I think that's good. And by the way, we agree. We think the whole purpose of a B2B website is not to try to sell to the shopping cart. That's a retail approach. That's not how business buyers buy. So there are all kinds of benefits that get uncaptured, and we're trying to work on how you make an assessment of what the real benefits are, because it's hard. So
that's right.
So we don't have any more questions. Anything you want to wrap up with, Ed, before I wrap up this call?
No, I mean, I just appreciate being here, and thank you to your listeners coming in. A lot of the questions that were asked are very strategic in which I appreciate. And all I would say is that if anybody wants to learn out more about who we are and what we do, and we're more about how we think about things. And I think that's an important differentiator, because I think that's what's needed in today's world. So if that interests you, just check out isapartners.org. And I think my information is my email. I think you'll probably have on this podcast somewhere too, and that's right available. Here. Yeah, feel free to reach out. I'm easy to get a hold of, and I'd be more than happy to help if I can. So I just want to say thanks to everybody.
Thank you, Ed. And you can reach Ed. So for the podcast listeners, I'll read the email address. It's eGerber, that's EGERBER at isapartners.org. That's eGerber at isapartners.org. You can reach me at iheller@distributionstrategy.com and Jonathan at jbein @distributionstrategy.com. Our next show is on Wednesday, March 3rd. We'll be doing our second call or show on distributor earnings to wrap up the 2020 fiscal year for a lot of these distributors who hadn't reported the first time we did a show like that. And Ed, thank you so much for being on the show. We really appreciate it. This has been Wholesale Change, the webcast and podcast for distributors. Thanks so much for your time. We appreciate your attendance and all your questions and participation, and have a great rest of the week. Bye now.